G'day guys, this is Jackson Millan, Wealth Mentor, and we're here for another episode of the Aureus Leaders Show. Very excited because I am joined by my business partners, and we're here to talk about all things finance, business, and how to grow and scale a profitable lifestyle business and create financial freedom faster. So we're going to do a little bit of around the grounds, and on this show today, we're going to be talking around financial automation for SMEs. How do we continue to automate and systemize the way that we manage our finances in business so we can navigate tough times with ease? So we're going to do a little bit of around the grounds with a 30-second intro. So Jim, starting with you, mate.
I'm Jim Fairhall-Dickey. I'm the head of wealth at Aureus Financial. I've been a financial advisor for the past 20 years, helping my clients create more personal wealth. We work specifically with business owners, and ideally we're helping them extract profit from their company and then put that into their own pockets to create the lifestyle that they're looking for.
Awesome, Jimbo. And in your spare time, mate, what do you do for fun?
Spare time, I'm at the gym. I enjoy a nice beer at the breweries locally in Sydney. And I enjoy skiing, snowboarding. So it's either the hot or the cold for me. Either way, nothing in the middle.
Love it, mate. Fantastic. And Harvey?
G'day guys, I'm Harvey, Head of Education here at Aureus Financial, and my role is to help our clients who are service-based business owners to improve their profitability, so optimise their business to produce more profit, to extract more out of the hard work and effort that they put into their business as well. So that's me in a nutshell, mate. Mate, I'm a massive sports fan, all sports, but heavily involved in Aussie rules footy. Hence the bent nose and busted teeth. But apart from that, when I'm not playing footy, I've got two little boys that I chase around on the weekends too, mate. So it keeps me busy.
Or was it an elbow that it caused the?
All of the above, mate. It's kind of a career of that, mate. That's resulted in this. So I hope it doesn't turn you off too much.
Hey Jackson, I'm Rakesh Nayan. I am a chartered accountant. I've got over 15 years of experience, pretty much helping SMEs move from a point of, I guess, what some would liken to the wilderness, to where they're able to better understand the numbers within their business, make educated decisions on how to grow their businesses and optimize their tax position. That allows for them to achieve a positive cash flow, which then gets them to a point where they can start chatting to Jim about how they can grow their wealth.
What do you do for fun, Rakesh?
Hopefully, this is not a PG channel, but I'm likened to a steak whore. I love all things steak. I always find myself on YouTube flicking through the shorts on how to grill different types of steak and different cuts and whatnot. I enjoy, I guess, socializing, and I guess I don't want to come across as a very boring accountant. I do lots of stuff, and normally that stuff gets me into trouble, and sometimes it doesn't. So I'm trying to steer clear of that, but anything outdoors.
I love it, mate. I've never heard of the term boring accountant and steak whore in the same sentence, so I appreciate that, mate. Greg?
So I'm the marketing director for Aureus, and I'm responsible for the lead generation, and that's a combination of positioning, nurturing, and conversion. So really understanding the audience.
And what do you do for fun, Greg?
For fun, I have 3 kids, pretty much looking after them, doing the dad thing at the moment.
Love it, mate. Fantastic. And finally, I'm Jackson Millan, also known as the Wealth Mentor. I'm the founder of Aureus Financial, and been involved in the wealth and business strategy space for over 16 years. In that time, we've scaled up a number of multi-7-figure businesses and helped over 1,000 clients build in excess of $3 billion in combined wealth. And in my spare time, I train Brazilian Jiu-Jitsu, currently training to do an ultra marathon of 60 Ks this coming Sunday. And we've also got an animal sanctuary where we've rescued and rehomed over 100 animals. So that feeds my soul, and it's how I keep giving back and align with my purpose. So it brings me a lot of joy. So guys, let's get stuck into this, and I'd love to do just a quick round around the grounds. What is a financial task that you've systemized or automated in your part of the business? So Harvey, let's start with you, mate.
Financial tasks that we've systemized as part of the educational business. Well, we're pretty much going through a process of systemizing the whole business at the moment. But in terms of financials, we've got a very specific cash management system that we've got in place to allocate funds throughout the business to make sure that we are physically banking profits that we generate. It's something that we do with all of our clients every month, is assist them in actually setting their business up so they can actually bank the profit that they generate. Which is why they entered business for in the first place, so that they can actually see the fruits of their labour, and we make that happen.
Okay, that was me. Awesome, mate. And Rakesh, what's a part of your business that the financial side of your business that you've automated or systemized?
I think starting off with bank accounts, we've implemented a system of profit first, whereby we provision for upcoming liabilities before I guess the need actually arises. Um, in terms of accounts payable, accounts receivable, we've got all of that going through. We're using technology pretty heavily in the business to try and remove the amount of manual handling that's involved there. And then for our clients, we are rolling out a single touch accounting process, whereby every month we finalize on the accounting work that would normally be done year end, which will ultimately cut down on the compliance process. So as opposed to turning around tax returns and financials in a couple of weeks, we hope that we'll be able to get that down to within a few days.
How about you, Jimbo? What is some financial stuff that you've automated in your part of the business?
So we have the wealth mastery machine that we implement in all of our clients' lives. So that consists of cash flow, allowing people to bank more surplus, and then redirect that into investments. So we want to make sure that our clients always have a consistent surplus in their monthly expenses or salary coming through, or profit they're paying themselves, and we want to invest that money automatically every month. Also, we want to make sure that they're having a holiday. So we've got a system where we actually allow for sweeps to come through each month, similar to what Harvey was saying in the business side. We run it exactly the same on the personal side. And this allows us to make sure that people are hitting their annual targets each year. We feel that this is the best way for clients to create more wealth for themselves. And it's a proven system that we've implemented with thousands of clients.
Love it. Fantastic. And guys, if you are interested, this is the last book that Rakesh and I wrote together, which covers off the entire system end to end. So if you want to implement it, go and check it out. And Jim and I have another book that's going to be released shortly that's going to go deeper into the wealth creation system. So make sure that you check that out. Now, Greg, when we talk about marketing, most people don't necessarily align their financial systems with marketing. But I know we've spent a lot of time understanding the economics of our marketing. So what are some of the metrics that you focus on and the systems that you've created financially in the marketing side of the business?
Our North Star metrics really are our cost per lead and our dollar per lead. And what that really means is how many dollars do we get per lead, which considers the lead going through a process of converting, what percentage, but essentially how many leads do you get and what's the return for those leads. Essentially divide the return by the leads and you get your dollar per lead. It's a really useful indicator. So what we've done to automate that, first and foremost, you need to track your data correctly. Secondly, it's a process of pooling our data into a centralized data warehouse where we're able to then disseminate and understand the data at a level across all the groups and all the marketing initiatives that we're doing. How we've systematized it essentially is through a system of pulling that data in real time and creating a series of dashboards using Databox. And this allows us to, in a snapshot, understand exactly where we are and what we're doing and how we need to adapt. And this is critical because there may be a time of year when lead campaigns that are performing well don't perform well, and you need to basically adjust the budgeting accordingly. On that note, we do have systems to automatically adjust campaigns based on their performance. So essentially, and this is where the cost per acquisition comes in, is when a campaign is underperforming, essentially costing too much to acquire a lead, we actually step down the budget gradually so that we don't spend as much on that campaign. It's important to not just cut a campaign out completely. What a lot of people will do is they'll just end a campaign and they realize later that those leads are actually really good. And what you want to do is essentially step it down, cut the budget down gradually. And the same way when you're scaling up. So when we see a campaign is performing really well, a good cost per acquisition, a good return on investment, and that's the other metric we track. And you can only really track the return on investment when you get your lead data into a CRM that can track the journey from acquisition to it can track the journey from acquisition to conversion. And essentially, it allows you to identify all the touch points through that journey, and then you can apply the automation um, to rules so that you can scale those campaigns up or down based on that. There's a big factor with regards to budgeting. We need to understand what the return is, and we use a 60-day window. What we've worked out is our lead to close time, or our sales cycle, essentially understanding that our leads convert between 25 and 40 days. We can then apply the right logic to manage that journey and that budget. Essentially, you want to start cutting budget if the leads aren't converting after that sales cycle period.
Fantastic. So guys, for everyone else here, particularly in regards to the dashboards and the automated reports that we've been creating for you guys as leaders in the business, what impact has it had on you in terms of your visibility of what's going on, how that may have shifted your behavior or actions in the business as a result? Rakesh, starting with you, mate.
I think it gives me more clarity on the areas that I need to focus on for whether it's a day or a week. And a few months ago, I heard a founder of a business speak at an event. The interesting thing about him was he exited his business with like a $600 million payout. And something he mentioned was that he checks his P&L on a daily basis. Now, as an accountant, I do the same thing, but seeing things in a dashboard and the key metrics all in one place without having to actually do the calculations, that's been a game changer because it allows us to tweak our activity accordingly. And I think the results are starting to come through from a profitability perspective as well.
Yeah, for me, I was always sort of unsure of how much profit I was making throughout the year. And we'd get to the end of the year and talk to my tax agent or accountant previously and would look at it and not be really sure where the numbers had gone. So we'd know we were making money, but now I'm tracking my weekly targets from a cash flow perspective. And so I can see if I'm on track from my profit perspective each month. If it lines up, fantastic. If I know, and because I'm looking at it weekly now, for me, it actually allows me to course correct throughout the month. So I don't want to get to the end of the month not hitting my target. And this has been really what's helping me manage my week, my month, personally and within my team.
Fantastic. How about you, Harv?
Yeah, 100% on the same as the others. But I think from my point of view is having that centralized location where you can focus on the real needle movers in a business. As a business owner, there's so many different metrics that you can look at and that can draw your attention towards, but what are the ones that really matter? And having this dashboard in place is what allows me to say, well, okay, these are the metrics that we should be following daily to keep an eye on, finger on the pulse and what's actually happening. And as you heard Greg speak about, just from a marketing perspective earlier, there was probably nearly half a dozen metrics he rattled off, which is, some of those would apply to a dashboard that a CEO or a business owner would be focusing on. So it's what are the real needle movers? that we should be tracking daily, and the dashboard has helped me out with that.
Awesome, mate. And look, in contrast, right, we've got this evolution in technology. There's a lot of fintech providers that are coming out. Almost software platforms have data feeds functionality. Harv, when you're working with business owners, how many of those business owners that you're working with are actually tracking these kinds of things at all in their business?
Well, it's interesting enough because I had a conversation this morning with a client who didn't have even something as simple as a CRM set up in his business, but he's doing like 4 to 5 million in turnover. So these it's kind of like very, very important nowadays that we're able to have these specific or sophisticated softwares, but bring the data to us in a much easier to read, more visual way of being able to understand the data, because that's the other aspect to it as well. If we focus, say, for example, a lot of the accounting softwares are very, very difficult to be able to understand from a financial perspective what's actually going on in the business and the story that our numbers are telling us. So things such as the dashboards, these softwares that allow us to understand what's really going on and easy that's well represented. Very, very critical. In this particular case, it was a CRM system that allowed him to understand the conversations and the relationships he has with his clients or past clients. So very, very similar thing, but it's absolutely critical now, this day and age, to be able to keep a finger on the pulse. I think that's going to be a theme of every time I open my mouth today, mate. Finger on the pulse. It's my favourite word, but it's critical.
Amazing. Well, Greg, you're our resident tech nerd. If somebody's listening to this and maybe they don't have a CRM, obviously most of our listeners and audience are service-based businesses. Have you got any suggestions of where they could start?
Wow, it's a tough question to answer because it really depends on your business. A lot of people are adopting Go High Level as a starting point, as a sort of all-encompassing. It can do landing pages, track your data. It's not as user-friendly as the likes of a HubSpot. HubSpot, I've used a lot for people in the past. It can get expensive as you grow. However, the user-friendly nature just it's designed for people to adopt quite easily. So it is a factor to consider. As far as the reporting goes, both can facilitate, what you need. I would say that to get data out of the systems into something like a data box, it can let you craft the report the way you want to, and I think that can remove overwhelm and just keep you focused. As far as other CRMs go, they're popping up and disappearing all the time. I would just say that there's the right CRM for the right business, and what you need to look at, I think, when choosing them is to see the pricing model as how you grow and what they charge you for. Do they charge you for contacts? Do they charge you for space? And I've seen, unfortunately, in some situations where HubSpot has become unfeasible for some companies. In other situations, it's been brilliant. So I think the economics around the pricing model is important. Most of them cater for what you need, and most of them have some sort of third-party integration that can either pull data in or push data out.
Cool. And Rakesh, from a financial standpoint, for a lot of our business clients, we're using a platform called Fathom in terms of improving reporting. What are your thoughts on using something like that compared to like just generating reports out of your QuickBooks or your Xero or MYOB?
It's like Harvey touched on it, so did Greg. Accounting systems aren't geared, or they aren't meant to be beautiful, even though their marketing is, beautiful software and so on. Ideally, it's there to serve a purpose, which is gathering all the information into your profit and loss balance sheet, cash flow statements. Ideally, you would always, or most of the time, need to look at an external product to um, to make sense of it in a visual format. Not everyone learns or takes in data the same way, and ideally, uh, I would encourage people to shop around, to not shop around as such, but speak to the experts when looking at implementing something. Because what I found is some clients in the past have actually spent or wasted money trying to self-implement rather than going to an expert and explaining exactly what they wanted and waiting for the end result. That's not to say that you can't try it yourself, but getting professionals in to help build those dashboards is always good. And also, as a business owner, you've got better things to do with your time. You may not know exactly what you need to be monitoring from a KPI perspective. Generally, accounting softwares will just give you the raw data, profit and loss balance sheet. How are you doing from a income versus expenses and assets versus liabilities perspective? But they won't tell you the detail around key metrics. In saying that, some software will allow you to, like Zero has a dashboard where you can customize it to your needs. It's still giving you more granular detail. It's not giving you a combination of information from different sources.
Look, we use Fathom in our own business for ourselves. And the thing I really like about it is it allows us to do kind of situational analysis. It allows us to identify the break-even point. It allows us to compare against different periods of time, particularly rolling periods of time, and basically highlight the metrics that are most important for us growing and scaling our business. And I think particularly you're also our accountant, Rakesh, and it allows us to be able to get more value from you because you can help us understand exactly what's going on, and we actually understand the numbers. So just because we're finance guys doesn't necessarily mean we can understand all of this stuff, and it just makes it a whole lot easier. Now, Jim, we use something similar to Fathom in the wealth business for our clients from a personal financial standpoint. Do you want to give us a bit of a rundown of the role that plays for clients who are working towards financial freedom?
Yeah, so we have our Aureus wealth portal that actually looks at the personal side of things. We can load in bank feeds, super funds, investment platforms, investment properties, homes, loans, pretty much everything. We use this as our personal wealth hub where we can actually load in a lot of the other documents as well to try and keep everything in one place. We can set some savings goals in there because I think ultimately we want to see what's coming in and what's going out. And I think we generally will just underestimate our expenses, especially when we're in times where higher inflation and costs are going up. Sometimes we can get cost creep where we haven't noticed that our insurances, all of our television accounts, the things that were streaming, all the things that are popping through have all gone up in price, and so we're wondering where the money's going. We can keep a monthly track of how our expenses are looking, and just really once a month look at how it's actually going. When new assets are coming on, it'll actually allow us to look at the values of when they're purchased, what they currently are as well, giving people an idea of how they're tracking towards their wealth goals. So for me, it's a no-brainer having a quick one-stop place to keep everything together. Usually we find in partnerships, one person might be more involved in collating and keeping all that stuff together. So if we can get a couple together and keep it all in one place, they can quickly check in without having to spend a lot of time to see how they're going.
Love it. And the thing I love most about the platform, Jim, is when I log in and look at my net wealth, it doesn't display a number. It actually displays a photo of a cassowary. And that's my primary measure of financial success. So it knows me very well. So guys, let's leave this a little bit of an open question. Based on where technology is at and everything we've discussed, the stuff that we're doing in our own business, where do you see are the biggest bottlenecks for business owners as a whole, where they're not leveraging this stuff, where they're potentially leaving opportunities on the table? Who wants to jump in?
I'll be happy to jump in because I'm seeing a bit of this at the moment. Clients are nervous naturally when things are more expensive, but we're looking at trying to create more personal wealth and buying more good quality assets. What I'm finding is at the moment that there is some opportunity to get into these. However, people are a bit cautious. By running the numbers and sort of stress testing and looking at risk appropriately, I feel like there is an opportunity to continually invest. So for me, it's about looking at what the ultimate goal is, and then effectively walking off the bridge, or walking off the platform, taking a bit of a leap of faith, knowing that things will change in the future, but we want to try and continually focus on the end goal, which is having this passive income target, net wealth target, supporting family, kids, and making sure ultimately we got the lifestyle that we're looking for.
Makes sense. Anyone else got some thoughts on that?
I think part of it has to do with the amount of time that someone or that an individual tells themselves that they have. If you're in business, one of the reasons you're most likely in business is to get to a better future. And if you're not making time to implement these steps as you go along, and you're hoping that one day you're going to get it all done in one go, that's not the right approach to take, particularly when you think about the effects of compounding. You know, easy does it and slowly wins the race. Um, and most people look at it as, like Jim said, it's a cost. But I think, Jackson, you've mentioned this to me in the past, but in life, we pay in one of two ways. We either pay financially or we pay with time. And I don't know about you guys, but time is one of those things that you don't actually get back. So if you can pay someone else to do it for you, that's probably the better way to go.
Makes a lot of sense. Harvey?
Yeah, I think from my perspective, this flows on to the conversation I was having earlier today as well about the softwares that allow us to keep a finger on the pulse. There we go. One of the Fathom dashboard we use and our clients use allow us to assess trends over time. And stemming off from this conversation was the client had recently caught up with his mates down the pub who are in business for themselves as well, talking about how tough they're actually doing it at the moment. And therefore, from that conversation, he came away feeling pretty average himself, because he kind of, fell into the same environment where, geez, I'm going to be hard on myself. I actually feel like we're not going that well either. But it's okay now because everyone else is doing pretty bad. Well, we quickly assessed some trends on how his performance was actually going with his business using these softwares that can keep an eye on things. And it was actually going the complete reverse. So he's actually his business from a financial standpoint was trending better off than what he'd actually thought going away from this conversation. So these softwares can certainly help, again, paint that picture of what's really going on with our business. And I think it's a vital piece. We discuss how important these dashboards are for us, having these softwares in place that allow us to keep a finger on the pulse, Jacko.
I love that. I agree with that wholeheartedly. And look, you guys know me as somebody who's very confident and sure of myself. And I don't necessarily like to let negative thoughts creep in. But I think it was last month, actually. And for some reason or another, and I can't really put my finger on the pulse of what triggered it, but I started to get a little bit nervous myself. And I started to go into a little bit of panic. But because of all of these systems we've got around us, within a matter of a few minutes, I was able to jump onto the dashboard, go through all of the data, and be able to use the factual information to then reevaluate my perspective. Like, even to the point, guys, that on my watch, I have, if I can show you, there's our primary KPIs. You're not going to necessarily be able to see it because I've got to turn myself, but our data box dashboard comes up on my phone. And I can see right now that our leads are up 39% on the same time last month. Our profit is up on the same time last month. Everything, all of the primary metrics, I have literally at a click of a button. And when you have that level of visibility and transparency, that you can, when you have that kind of moment of weakness, or you have those negative thoughts seep in, or the people around you are influencing your perspective, you can ground yourself back to the truth. Because when we have that data, we have the source of truth. And just because everybody else is suffering doesn't mean we need to. So I can definitely attest to that. Greg, what's your thoughts on this, mate?
I'm glad you asked. For me, I think one of the biggest factors is lack of awareness. They actually don't know what's available to them. And I think when you make that clear, you can start explaining things like the ROI of the thing. That's that sort of next level of awareness, if I go back into marketing speak. But it's essentially a couple of things. And going back to like my programming experience, what I find is that there's a fear of technological change, and a fear that they don't have the capabilities internally to implement or run or leverage these systems. So I think a lack of technical expertise can create that fear. And it's always good to have some sort of advisor to break those things down for you, to understand them more simply, to understand the benefits, and essentially that removes that barrier of entry. And I think understanding the return on investment is a key thing. To say that understanding your data better is going to make better decisions has a huge impact on your return on investment across so many areas of the business. So I think the first thing is just to be aware, and that's kind of what we're doing right now, is helping people just be aware of these things, and that's the first step. And once you understand what you don't know, you can start taking steps towards those changes.
It's really funny, mate, that you say that. I literally wrote a post today about this exact topic. Now, if we go back to my first serious business, which was a men's e-commerce brand called Siete Clothing Co. And I was running Facebook ads early 2010s, like early days of Facebook ads, where I was getting email subscribers on my list for 10 cents. And I was getting sales for like between $2 and $3. And before I even knew what a self-liquidating offer was, I had this campaign that I stumbled across that we were selling a free plus shipping bow tie, and it was cash flow positive on ad acquisition cost and the cost of sales for the bow tie. And I was getting basically email list subscribers for free, and then using my email list to push people to sales, which my average order value was like $75. It was crushing. And I stuffed that up by outsourcing it to an agency who then cooked all of my campaigns. And then when I nearly sunk my business, and when I eventually took it back, I stopped running that campaign. And like, I look back, I'm kicking myself. Then fast forward, my next business was my advisory business. I was getting webinar subscribers or VSL subscribers for like 10 or $20. And I was getting clients for like $300. And I got the shits because it was too high. And the average sale was like $5,000. Like, imagine being able to spend $200 or $300 and then $5,000 comes out the other side. And I was optimizing it down, and I cooked those campaigns and I stopped running them. And then I know now that like our cost per acquisition is just shy of $4,000. And I know that our 12-month customer value is just shy of $20,000. And I know that our cash collected up front is $4,700. So based on those numbers, we can confidently scale our campaigns and spend more than like old Jackson 5 years ago or 10 years ago or 15 years ago. Like, I wouldn't have been able to sleep at night if you said to me that it was going to cost us $4,000 to acquire a customer. And it's just interesting that if I just had that data, I literally would have like 8 figures more in wealth right now. I guarantee it.
I love that story, especially the fact that you sold bow ties, and I've got a story of when I was actually selling Yorkshire Terrier custom merchandise. I tapped into Facebook as well. I was getting followers at $1 cent, and essentially grew a community of Yorkie fanatics that were buying these pendant necklaces with their custom names and pictures. And I had an amazing ROI, but I was sort of early in understanding the metrics. I think what you touched on there, what's important is to make decisions that consider that return on investment. There's a scary stat that so many, I think it's like 80% of businesses cut their marketing too soon. And what they find is that there's a period of nurture that takes place that allows that person to gain trust, to understand who you are. And over that time, they convert. And what happens is people cut their campaigns too soon. And there's a few reasons, they do that incorrectly, is that they're not tracking their data correctly. They don't have a historical idea of what it takes. And the other thing is they don't understand that some campaigns have a period of optimization to become profitable. And what are those metrics you can tweak to increase your profitability? How can you change your creative or use your best performing ads in another campaign? And essentially that optimization process, along with the nurture time, creates that successful campaign. So you don't want to cut those campaigns too soon. But with you understanding your return, these days marketing is about whoever can buy the customer for the most amount of money wins, because they capture the market. They essentially the person that is at highest return per customer can spend the most to acquire a customer is going to take the market. So if you can increase your back end offers to increase that value, you could then spend more to acquire a customer than your competition. You're probably going to get better quality clients because you're spending that money. So understanding your data is critical, not just for the return, but for the quality of clients you're going to acquire. And we all know what a crappy client can do to your day, month, or even team. I've seen bad lead generation make A-team players leave a company because they were tired of taking on poor clients that were dealing with leads that wouldn't convert, that would shout at them for phoning at them. So it's so critical these days. And the fact that we have data transparency in so many parts of the business, if you can just distill that data to understand what's really moving, like Harvey said, what's moving the needle, you can make some quick decisions. But I think there's an underlying set of data points that can also help you to make other decisions in the business as to who to hire. What were what were some good other I could think of other examples now, but essentially if you were acquiring a business, what were the metrics that strategic it might be going a bit complex here, but essentially if you're acquiring a business and you're gaining a strategic advantage, like a cross sell to your business, to understand the flow of leads from that business to yours, it the future decision making gain is it's hard to quantify the value. And like you said, there's a compounding effect to these decisions, and it's having that finger on the pulse with that real time data that's distilled in a way that's going to really make that return happen.
And talking about fingers on pulses, Rakesh, you are the first accountant that I've ever met that introduced any of these software tools or platforms in a typical accounting conversation. I remember even our last accountant, who was a phenomenal accountant, don't want to take anything away from him. He was part of a publicly listed firm, gave really great advice. But basically, he just built this spreadsheet that had an Excel spreadsheet that had all of these macros and things over the top of it. And it was super confusing, really boring. Why do you think it's so hard for accountants to embrace these new technologies, and why aren't they introducing them into their client engagement?
I think a large part of it has to do with the traditional thinking where they're not going to be relevant to their clients. Because the client then has to pay you, say, on an hourly rate to build something like that, or to monitor and update the spreadsheet as an example. Whereas what I found is it actually opens up the door for further discussions because you're uncovering data which is automated. So rather than charging our clients an hourly rate, we have a fixed fee for our service. And basically, it means that we can have more meaningful conversation rather than spending the money or spending the time that they're paying us for doing manual tasks. So once you've got the automation in place, then it's just like, okay, well, this is how you performed for the month or the quarter or the period, and then analyzing and picking out the outliers. Easily identify where improvements can be made, and then look at, okay, well, how do we move forward? So coming back to your question, I think it's an old school mentality whereby accountants fear that they're going to lose the client if they start pushing additional things that the clients need to then pay for. But when you think about it, the automation behind a software like Fathom, as an example, what you get there, the same team members that would have been building a manual worksheet or dashboard, they could be having those conversations, which I think the way advice is moving into the future, eventually AI will step in and do most of the heavy lifting, and it's those conversations that we're having with our clients that end up carrying more value.
Yeah, I agree wholeheartedly. And just because AI is going to automate this stuff, I don't think it detracts from the value of an advisor. I think clients are going to seek more value because they're going to have access to so much information. They need somebody to translate that. And Harvey, that's a big part of the work that you do with your clients in terms of profit coaching. Are there any particular areas of competency around understanding the numbers that you focus on with your clients, specifically in this kind of economy?
Yeah, absolutely. The good thing with software like Fathom is that you can, once you grasp the concept the first time, it's very easy to sort of revisit that ongoing from then on and use a tool like Fathom to help you understand. But I think in terms of competency, such as accounts receivable days, for example, how long does it actually take you to, after you've delivered on a service, to actually collect your cash? And getting an understanding that if you're collecting that quicker than you paying out cash to pay your bills, there's a very, very important metric there to have competency on, right? Because if it's the other way around, we're bleeding cash from our business, and we're wondering why it's a struggle each month to pay bills, and heaven forbid if it comes down to paying payroll, for example, which has popped up from time to time. So the ability to use a software such as Fathom or a financial dashboard of sorts allows us to keep a finger on the pulse from those reasons, mate, and assist with gaining that competency, because it's very, very difficult to look at an accounting software, for example, and try and figure all of this stuff out if you're not a financially minded or from that aspect. So I see it often, particularly around cash and cash flow. With clients, we really need to be confident in that area around that. So, yeah, it's something that I see often, but with the help and the relationship that we have, we can help clients become confident around their numbers a lot easier using.
Yeah, and it's interesting, mate. I've seen this happen so many times. We had a client who didn't have his finger on the pulse. Very smart guy, run a multi-seven-figure agency. And he was primarily working in the big multinational space with his clients, and many of which had 90 to 120-day payment terms on the invoices that he sent out. And he was very well known in his industry. He was growing, scaling, getting a lot of influx of inquiry. But when he came to us, he was growing his business and his P&L looked amazing, but he was on the verge of going broke. Like, he didn't even know how he was going to make payroll in a couple of weeks' time. And then when we unpacked it, we realized that all of his expenses were fixed expenses because he had full-time salaried employees that were on big ticket wages, many of which were on a couple $100,000 a year. And he needed more of them in order to deliver on those projects. But in some cases, he wasn't seeing money for 6 months. And basically I said, mate, you're growing broke. The faster you grow, the faster you deplete your bank account. So we're able to rework some things and then get him out of the hole, save his business, and getting him into a point where he was in a sustainable position. And it was the difference between him going broke with a really great business or him sustaining. And luckily, he's been able to turn the corner. He's been able to scale to now a multi-8-figure business, and he's done very well. But it was one number of understanding that cash conversion cycle that changed everything, and it was Fathom that calculated that. But without the advice, he wouldn't have been able to know it. So it just goes to show this is serious stuff.
In addition to that too, mate, it's a matter of being competent across various areas, not just, say, for example, looking at that P&L sheet. It's your balance sheet, it's your cash flow statement, to be able to be competent across those as well. Because I think there's a lot of, or too much focus just focused on I call it the trade sheet, the P&L. And this is where that issue would have come up with that particular fella. So it's being able to assess all of those and identify and see the story of what's actually going on, which is sort of where we've been able to help out with our clients the most. Yeah,
bang on. And Jim, from a wealth side of things, like I think for many business owners, they often neglect their wealth, and it's because there's other more exciting stuff or more pressing things that need to be solved. So what do you think are the biggest opportunities for business owners, and where should they be focusing their attention when it comes to their wealth figures over the course of, say, the next 12 months, mate?
So we usually, over 12 months, usually income targets are pretty important. If you're thinking about buying assets and you need to use a leverage, we need to understand whether it's a servicing from an income perspective or it's an equity position. But usually those things go hand in hand. We've got a very strong focus on property and also buying long-term assets that are going to help grow the portfolio. And so when we're doing this, we need to make sure that the numbers stack up to be able to afford it. And so we want to make sure that we're planning or pre-planning these numbers as best we can. So we would work with Rakesh from a tax perspective, looking at how the numbers are going to come out, how the cash is going to come out of the business, and what structure we're going to use to get that money out. So we don't want to pay more bonuses to the ATO, as you like to say, Jackson, which no one wants to pay tax if they can help it, or too much. And Harvey as well. So we would actually all catch up together and have a conversation and say, look, can the business sustain taking out extra cash when they've built it up in their profit account? When are we going to structure this, and how much are we talking about? But ultimately, we want to try and get to a position where we can buy as many good quality assets and hold them for as long as possible, so that when they get to a point where they want to take the foot off the pedal working in the business, if it's not an asset that can be sold, or if we're not sure if it can be sold, they've got enough money in the kitty to actually live comfortably to support themselves.
Love it. Fantastic. Awesome. Great advice, mate. Greg, what would be your last hot tip that you want to leave people with before we wrap up today, mate?
There's things that you can systematize in your business. And I think what you need to understand is, what are the most impactful things? I think first and foremost, having a clean data source and finding the truth of your data is the starting point. I would take an 80-20 approach to what system is going to make the biggest impact on your business, implement next. And I think the awareness and the understanding of your data to drive those next decisions really is the starting point.
Makes sense. Awesome. Rakesh, what would be your last golden nugget before we wrap up here today, mate?
In a way, I have to agree with Greg. Most people go out and buy a software just because it looks fancy and it promises the world. If your underlying data is crap, you're going to get garbage out. So I think you have to have a plan of exactly what you aim to achieve from using a particular software or product. Normally what we start out with is do a bit of a needs analysis. So what ultimately, where are you now? Where do you want to get to? And we map out a journey for the client to move along. And we'll give them options. I think the key thing is that there's a few different options for every software out there. And as Greg said earlier, some of them have been around for not too long, and some of them have been around for ages. It comes down to what's affordable for your particular purpose. And it doesn't mean that just because you've implemented one thing, that's a set and forget. It should always be something that's monitored, including the costs. Affordability is a big thing because that impacts your underlying profitability.
Harvey, what would be your last golden nugget before we wrap up today, mate?
Mate, I think following along from the other two lads, particularly around the 80-20 rule Greg mentioned, is majority of our clients are pretty good at making sales, right? They're good at generating the funds. But if there was one system to put in play and automate as much as you possibly can, it's how you collect your cash. Because as you mentioned about the 90-day terms that fella had on him earlier, if we're not collecting our cash and by ways of, if we deliver on our service on account to clients, it's how long is it taking us to actually collect that cash? And by having a system in place, be it somewhat automated, or automating it as much as you can, to the point where the majority of the time people just need that once-off reminder to say, hey, look, there's an invoice owing, let's get it paid. But it even goes probably one step further than that, as well as assessing your current terms of engagement with the client as well. Right from the sales process, the terms of engagement are collect as much cash up front as you can, for example, and then the remainder of that, what's the process for us in following up on that remaining balance? Because without cash, we certainly struggle to maintain the momentum we've worked so hard to achieve, mate. So that would be a process. We can automate as much as that as possibly can, or at least get somewhat of a process in place on how we collect cash.
Love it. Awesome. And I'll wrap up with saying, just bringing all of this together, this can be overwhelming, and there's going to be lots more platforms developed above and beyond what already exists. And it's going to continue to emphasize that need for that accurate data. And the overwhelm comes from not understanding how to think about it. So we call this the data triangle. In the center, you need to get clear of the outcome that you want in your business. So is it cash collection? Do you want to collect a certain amount of cash per month? Is it a certain number of leads? Is it a certain number of new clients? You need to clarify and quantify what is the outcome that you want. And that is supported by three factors. One is the activity. What is currently being done? And you must have truth around the activity. Then it's about data. How does it compare? So how does that activity compare to, say, the prior week or the prior month or the prior year? Because this is how we contextualize the numbers. And then thirdly is the optimization. What can we do to improve that particular activity in order to bridge the gap between where we are and where we want to go? And when you think about data this way, it becomes a whole lot easier for you to create a philosophy and for you to be able to get more value out of the platforms that you are using. And it just simplifies it a whole lot more. And trust me, I've spent over a decade to come to that realization and made a lot of mistakes along the way. So this helps you keep the finger on the pulse, isn't that right, Harv? Love it, guys. Well, I appreciate you all taking the time. It's been good fun. Now, guys, hopefully you've got value from the Aureus Leaders podcast today. If you've got any topics that you'd like us to cover in the future, feel free to jump in the comments, flick us a note. We're going to be running this once a month and happy to cover off any topics that you want to suggest. Now, if you are a business owner, you're looking to build wealth and improve your profit so you can create financial freedom faster, make sure that you jump on our financial performance scorecard and get access to all of our best-selling books and our best resources for free at wealthhealthcheck.com.au. That is wealthhealthcheck.com.au. Get a customized scorecard based on how you're tracking and get some suggestions around how you can move that needle forwards and keep the finger on your pulse. We will catch you on the next episode. Catch you later, guys.